My name is Luis. I'm the managing director of Rebel. As you guys have heard, we're early stage VC fund. Our mission is pretty clear. It's investing in what we believe is the top 10% of Y Combinator startups. I'm sure you guys have heard about Y Combinator, but in essence, and it's kind of what we have here in the slide. It's a very unique pond of fishing out of, because of the probability of hitting unicorns, hitting successful startups is way higher than when you would expect in non YC startups. For example, if you look at the rough data, the total value of Y Combinator startups now exceed more than $800 billion. More than 100 companies are valued over $1 billion. More than 300 value over $150 million, and more than and around 18 companies are public companies. So definitely a very unique ecosystem to be investing out of. Here we have a slide that we put together that shows YC seeded, more than around 20% of all Silicon Valley unicorns now value at $5 billion or more. So definitely far more than any VC fund in the US and in the world. So again, definitely a very unique ecosystem to be investing out of.
I hate talking about myself, but basically I'm a serial entrepreneur turned a venture investor. You can see my bio here on the slide. I started Rebel in 2019. We started investing out of our first fund in 2020. The Nordic Bloom team were LPs in our first fund, so we go back quite far. And we've now invested in over 300 companies. Well, not over, nearly 300 companies across Rebel's first couple funds. We'll be at well over 300, approaching 400 by the time we're done with our Fund 2 investments. And we're now, I believe, the single largest investor into new YC batches in terms of like dollars per batch. So we started small, but we've become a pretty big player in this ecosystem. This is a new slide we just added recently to kind of illustrate visually our portfolio strategy. And amongst Y Combinator startups, there's a very steep power law curve that really dictates investor returns, where the top 10% of YC companies really drive about 96% of all the investor returns. And we just target that top 10%. We don't hit it perfectly, of course, but we don't have to. If we shoot for the top 10%, and even if we have some misses, as long as we're outperforming YC averages, our portfolio returns are very, very good. And that's kind of what we've been doing so far. So what this bullseye illustrates is the center of the bullseye is the decacorns, which are about 1% of YC companies, but can drive 500x sort of net returns for seed investors. The unicorns are about, well, unicorns plus decacorns are maybe 6% of YC companies, and they have about 50x returns. And then the $100 million companies are about 15% exclusive of the unicorns, maybe 20% or so inclusive of the unicorns. And if you hit a $100 million company that's not a unicorn, it's still about a 10x return. So we obviously don't hit the bullseye perfectly, but this kind of illustrates what we aim for.
We couldn't fit it into the slide, but it kind of shows how many, even though we have a big portfolio strategy, when we invest between 150 to 200 or so companies in each fund. This is kind of the funnel of investment. 70% of our investments are initial seed investments, and we hold on 30% for follow-on reserve. In essence, right now, all of our Fund 2 investments, we have pro rata right, almost all of Fund 1. What that provides is that we're able to double down on the next equity round after our investment. So we usually invest up to the Series A, and if there's room and the valuation is not too high, we try to invest in the follow-on rounds. But at some point, it just becomes too expensive for us. And a value add that we bring to our LPs is that we're able to provide access to these deals later stage, and we're able to create SPVs or even do direct introductions, and our LPs are able to invest directly into the companies after the Series A. This is a slide about our algorithm. This is with our partnership team, our access, also our algorithm It's our secret weapon, secret sauce, and kind of puts us apart from other funds, but at the same time help us focus on the outliers or the potential outliers. So we're right now on the fourth version of the algorithm. We just released it during the summer, and in essence, what the algorithm is doing is that it's able. We had found that within the YC ecosystem, there is a 25% chance that a company will become unicorn if they achieve $60 million valuation or higher. So what our algorithm really does is that it helps us focus on that top 25, 30% of companies. When we have back tested the algorithm from 2022 all the way to 2005, it's more than 70% accurate at determining and giving us a signal on which companies are going to achieve that $60 million valuation or higher. So definitely a very strong and powerful tool that we use as part of our investment cycle. The way that mechanically works is that there's 4 batches of YC a year. Whenever a company enters a batch, our algorithm is able to pick it up and it's able to collect more than 200 data points on each company, and we're able to determine if we want to move forward and want to interview those companies. As soon as we receive a signal from them, then we assign a partner, and one of our partners interviews them. We can spend hours talking about the algorithm, and Jared, this is his favorite part of the fund. We can definitely answer any questions in the Q&A, but definitely a very important aspect of our investment thesis. So this slide sums up a bit about our competitive advantage. One that I feel very proud. Definitely, we have talked a lot about our investment thesis. We only invest in YC. The algorithm is a big part of our investment process, and then at the same part, our partnership team are second to none. But you can have all of that, but if you don't have the access, then it becomes very difficult to be able to invest in the companies that we have strong conviction. And we feel very proud that we have almost 100% win rate. What that means is that almost every time that we put an offer down to companies that we feel that are going to be successful and that are going to be outliers, almost all the time we get assented into those cap tables. So as Jared explained, and I kind of alluded to, Rebel goal is to pick and to invest in the top 10% of Y Combinator startups in each batch. And this chart kind of validates that our selection process is in fact outperforming and is working, when we compare against YC. Even though Fund 1 is still a bit young, as I mentioned, it's almost three years old, average investment age. So it still has a lot of time to mature. The average seed net return is almost 2x. As you know, the net seed return multiple is the earliest, most comparable indicator of whether a VC fund, his initial picks are on track, generating the power law outcome. So again, we feel very, very proud and very how so far Fund 1 is maturing, even though it's still a bit in the early days. Fund 2 is a $110 million fund. It's still in the early days of its deployment phase. We started investing in 2024, and it will finish making initial seed investments in 2026. So we have one more batch this year that we're in the process of investing, and then 4 more batches next year. So far, the Fund 2 has invested in 103 companies, and the companies have raised more than 250 million, and the total enterprise value is a bit over $3 billion. It's important to note that we are projecting that Fund 2 will invest in about 150 to 200 companies when you finish making interesting investments next year. So kind of similar to the same amount of companies that we invested out of Fund 1. Next slide is Fund 1 portfolio RR by vintage. So we have all vintages. I must caveat that we included 2019 because Fund Rebel started as an SPV in 2019, then Fund 1 started in 2020. That the SPV in 2019 only invested in 8 companies. So, but we included here so you have good visibility. But in essence, our portfolio RR net dilution for Fund 1 is 27% for pre-2023 investments and 24% including the new investments. So this numbers, demonstrates that early cohort positions are maturing well, and that still trending upwards even after dilution and the softer 2022-2023 market. Next slide is a fund two portfolio RR by vintage. Even though we're still investing out of fund two and it's still in the early days, we already have some early winners, early markups. So our RR today it's 20%. And again, similar to RR, fund one consistently, it's in the top of Cambridge Associates quartile benchmarks. So fund one MOIC is 2.1x for pre-2023 investments and 1.7x including newer investments, and fund two is around 1.1x. So this confirms, this graph confirms that the outperformance is not just IRR driven, time weighted, but also multiple and capital driven. So again, feel very proud that even though we're still in the early days, the performance has been strong. Here's just some portfolio highlights, just to give you some flavor of how companies are maturing. The next few slides include Series A, Series B, Series C's, and then safe markups that we have had since our investments. Again, this is just a flavor, so it's just a few of the companies. I'll point you guys to the current valuation column, the gross markup, and the notable co-investors. You will see that notable co-investors along us are top tier VC funds. So here's for Series A's. Here's companies that have gone and raised Series B's. And then here's a few that have raised Series C's rounds. And in the next slide is just some safe markups that we have had since our investment. Again, pulling you to the current valuation, gross markup, and notable co-investors. Those are good performance and good showing how those companies are maturing. And finally, we're here because we are raising our fund three, given the tremendous success of fund one and fund two. Our fund three will be a $150 million fund that will follow the same proven strategy as fund one and fund two, invest in the top 10% of Y Combinator startups. We predict that we'll invest between 200 to 250 companies out of fund three, and fund three will start calling capital on investing starting in 2027. I'll pause there. There's a lot that I can discuss about fund three, but I think this slide covers a bit. But I'll open up to Q&As and leave the next few minutes for that.